If you have the courage of your convictions, which I understand that many speculators don't, the idea that your perceptions differ from the markets is a gift from God. I'm very nervous about the fact that real estate prices are propelled by artificially low interest. When I bought real estate precisely because of the delta we talked about earlier in this interview. My cost of capital stayed the same while I could increase my rents. And the delta between my return on capital employed and my cost of capital rose. It didn't occur to me in 1990 that the cap rate, the discount rate would change. In other words, I got this huge benefit for free, which will tell you how little I knew about real estate. I don't see interest rates going sub-zero in a real sense, which means that the discount rate or the cap rate that contributed so much to the performance of my own real estate portfolio is no longer wind in my sails. If you are competent in real estate, if you can buy a piece of property and you have the skill set relative to your competitors to upgrade it. In other words, if you are competent in the business, real estate is one of the great business known to man. I'm just not particularly competitive in it. The only sector where I am increasing my personal exposure to real estate is very high quality farmland in the upper Midwest of the States. I believe that water has been an undervalued component of farmland investing for 50 years. And I believe that neglect is coming to a halt. So to the extent that I can buy very high quality farmland in the US upper Midwest, I'm doing that fairly aggressively. The idea that I am going to be driving a tractor or, heaven forbid, stretching a fence is over. I'm not even going to negotiate leases between myself and a tenant. I buy farmland with very, very high quality farm managers, a couple of whom I've known now for a decade. I don't any longer want to be involved in operating farmland. There's an interesting dynamic where the farmers my age, well, some of them are dying, the rest of them are retiring, and it's a very capital intensive business. And often, their children want to become Daniela Cambonis. They don't want to be stretching fences. So what's happening is that there's an emergence of a class of super farmers, family farms that operate 4,000 or 5,000. They may own 600 of them and lease the rest. And so agricultural real estate has become an asset class like other real estate. We buy very high quality farmland in the upper Midwest and we lease it on a net lease basis, the same as we might a warehouse, to a family of super farmers, somebody who farms 5,000 or 6,000 days. Great for them, great for us. I think the investor must first focus, particularly younger investors, if you rely particularly on the popular media, I think you're setting yourself up for real failure. Understand that their job is to sell you bread or sell you soap or sell you mutual funds. And the consequence of that is that any theme they talk about has to be so broadly acceptable and popular that its time has passed. You need to educate yourself so that your perceptions are formed by yourself with your own family in mind, not by the greater fools. Buffett famously says that the market in the near term is a voting machine. In the long term, it's a weighing machine. If you are happy with the way Americans vote, perhaps you're happy with the outcome that you can expect by playing the latest fad promoted by Wall Street. I'm not. I believe myself, as we said earlier, that the wind is in the sails of precious metals in particular, which attracts me because I know something about them and I'd like to buy more of them. As we discussed, you and I, 9 months ago, the energy sector, despite the fact that maybe Biden doesn't like it and Merkel didn't like it, the big thinkers don't like it, everybody else does. Everybody else wants to drive cars and stay warm. And so the oil and gas business, contrary to other people's demise, didn't go away. And it still looks very, very, very attractively priced. The final thing I'll say, Daniela, and I've noticed a lot of people mistake, it is true that your cash savings are costing you. It is true that when you put money in the bank and you make 50 basis points, in a world where the purchasing power of those savings are costing 550 basis points, you have to hold cash anyway, because a circumstance, and I'm not saying it's going to happen, a circumstance where you have a dramatic reckoning, something like 2008 or 1987 or 1990, liquidity squeezes, when they occur in the market, take down the price of everything temporarily, the good, the bad, and the ugly. Having the cash gives you the tools and the courage to take advantage of that circumstance rather than being taken advantage of. I look at the depreciation of the purchasing power of my savings as being an options premium, to have the liquidity to take advantage of illiquid times in the market. I don't think that the economy or investors care much about what the crypto community thinks they have to do. I don't have the appropriate numbers for crypto, but let's look at precious metals market share. In the United States, precious metals and precious metals related investment comprise about 0.5% of total savings and investment assets. That's down from a 3-decade mean of 1.5% to 2%. And crypto's even smaller than that. We flatter ourselves, these business, by thinking that we're an afterthought. My discussion with regards to gold is that gold doesn't have to win the war against crypto, which on a global scale is an irrelevance. And it doesn't have to even win the war against the US dollar. It has to lose the war less badly. If ownership of precious metals and precious metals related assets in the US market returned to its 3-decade mean, demand would triple. There is lots of room for precious metals and lots of room for crypto. I personally believe that they serve very different functions. They are competing right now for a market that's highly visible, that you and I both deal with and are part of. But the competition between them is irrelevant on even a national scale, but much less international. I avoid tech not because of valuation, but rather because in my declining years, I tend to invest in industries that I can and for the most part, the technologically based businesses are businesses where I don't believe that I have a durable competitive advantage over other investors. When I look at the margins that are generated by the mature technology business, I'm attracted to. I'm just not smart enough to know whether those advantages are durable. So I stay out of the tech sector, not because of its sector advantages or disadvantages, but rather my own disadvantage compared to other speculators who might be more competent in understanding technology than I. I have a rule in place now, Danielle. I won't invest in an industry that I can't understand, and certainly won't invest in an industry where I can't either spell it or pronounce it. I'm smiling. The truth is, I have enough money now that Bonnie and I can get through life without breaking a sweat. But that notwithstanding, for some odd reason, I want more. And I believe that the wind is really, truly, firmly in precious metal sales, meaning that I would like to own not merely more, but lots more. And the idea that a sector that I'd like to own lots more of is going down in price, to me, is absolutely wonderful. Imagine yourself, Daniela, in suburban New York City, and winter's coming. So you decide that you want to get yourself a nice coat. Your old coat's from Montreal, and it's outlived its purposes. And you go into a shopping mall, and you're expecting to pay $300 for a coat. And you see that coat marked down to $160 from $300. You want the coat. Are you happy or are you sad? The idea that people don't buy mining stocks the way they buy coats is absolutely mystifying to me and absolutely delightful.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.